Hi guys, thanks for tuning in to another episode of Nuggets News. We're here with a couple of special guests from our favorite platform, Santiment. So you guys have seen me sharing all these metrics. We look at social data, on-chain data, trying to get a bit of a heads up with what's going on, tying that in with our fundamental analysis and technical analysis. I just love the edge that this stuff gives us, and I'm sure you've noticed it as well. So welcome to the show, Brian and Dino. How are you guys?
Great,
Pretty
my friend.
good.
Thanks so much for having us.
No, it's been a while. We've been trying to get this sorted, and you and I have been speaking a lot behind the scenes, which the audience doesn't always see. But I'm looking forward to getting into all these metrics today and giving us a bit of a heads up on what is coming next. But I guess to start off with, do you guys want to give us the quick rundown of how you got into this metrics and data and what's your background, and then crypto?
Yeah, absolutely. I can start it off, and Dino, feel free to add in a few things as I go. I've been with the team a little over a year. I'm the director of marketing, and I also work on specific price models. And we've been around since 2016, working on slowly adding any public blockchain data that we possibly can that can provide information to our traders and investors in terms of what's happening both on-chain and socially in the crypto markets. Obviously, we have a special focus on Bitcoin and Ethereum-based projects, but we cover over 1,000 projects overall in terms of data, both on-chain and social-wise. So we like to focus on a few different things, ranging from development activity to daily active addresses to social volume, to what the top 10 trends are at any given time in terms of overall increasing discussion versus their normal resting averages. And it gives people a pretty good idea of what may be the hot topics and what's most likely to pump or vice versa dump. And there's just a lot. I mean, what I'm talking about now really is the tip of the iceberg in terms of what our platform is about. And we've got such an extensive platform that we're excited to just show it all off and show everyone what we're about.
Yeah, absolutely. I think people will look at some of the charts today, but people will have also probably seen those reports that I share on Twitter and in the videos. Top 10 by developer activity. A few months ago, there was top 10 coins most likely to pump and top 10 most likely to dump. Those played out really well. So it's all that data that you guys tie together into reports as well as the charts. But Dino, tell us about your story.
Yeah. I'm actually, I guess in crypto terms, I would be considered a latecomer. So I came into crypto in early 2018, basically after the bubble popped. The bubble. So I started, getting into the crypto hype after the bubble, everything crashed. One of my friends was kind of trading heavily and extensively throughout 2017. So just like, trying to get as much knowledge about the market as possible. And then I saw Santiment hiring. Actually, one of my friends was, hired as a product manager for Santiment, and I was, immediately sent my resume, and I became one of the people doing market analysis. Well, eventually, first I started as an SEO and in general marketing, and then I moved into just wholesale market analysis. I've been with the team over 2 years. Live and breathe these metrics. Really think, like you say, Alex, I really think that there's a lot of untapped alpha in on-chain and social analysis that people are now getting a little bit privy to, but it's still, I think, just the tip of the iceberg. Most people, I think, are still hardwired as far as TA is considered, and I think they're a little bit squeamish on getting into on-chain and fundamental analysis because there's a lot of data points, and it can be overwhelming at first. But if you stick with it, there's gains to be had. At least I think so. So yeah.
Yeah, alpha. That's the hot word at the moment, isn't it? And funny story, just so you guys know, back in 2017, 18, I had what I used to call my secret indicator, and it was just like 10 or 12 metrics that I would look at, and it was trying to get the stuff that you guys look at now, trying to get Google searches, people joining groups, activity, growth of channels. And that was all just manual sort of scraping and me looking at stuff. And now there's just so many good sites that have all this, I don't have to bother doing all that anymore. But where should we start? Who wants to share their screen first? I think you're going, Brian. And I thought
Yeah.
to start off with, guys, it could be good, Brian, do you want to show us the sort of top 10 things that you look at for Bitcoin? Did you want to start on, or?
Absolutely. Yeah, so give me the thumbs up that you guys can see this okay here.
Perfect.
Yep.
All right, beautiful. So as I mentioned, we like to track development activity for as many projects as we can, well over 1,000 projects that we have this data on. What we're looking at right here is Bitcoin, Ethereum, Ripple, and Link and their development activity just over the last 6 months as a way to sort of gauge how active their coders have been, what their GitHub submission rate is looking like compared to one another. As we can see, Ethereum is the dominant presence, and this has been the case for at least 3 years as far as I've seen. And what's interesting is we can sort of see fluctuations over time. We can see that Bitcoin here in early to mid-October really had a big push in development activity. And we saw the same sort of with Link and, different projects ebb and flow at different times. And for those of you who think this would be a direct price indicator, this is probably far from one of our best. You won't see nearly as much correlation here as you would see with something like daily active addresses, which we'll get to. But in this case, what we generally look for is just an overall rise over time. If a project is showing, at the very least, a propensity to increase their development and innovation and ways to make their project more compatible with what the market demands as years and months and weeks go on, it's generally a good sign. So if we looked, I won't name any names for what projects to avoid based on development activity, but there are plenty out there if you want validation as to which projects to kind of capitalize on versus stay far, far away from.
Yeah, I think a few months ago, one of those reports was a few of the maybe hidden gems, projects like Amisago or Raiden that people thought were dead, but they were just buzzing with development activity. And in the following few months, their price performed really well. So I think that's a good overview there.
Yeah, and a lot of people have the misconception that development activity can sort of be a skewed statistic because there's too much. There's a lot of just mundane daily activities that coders and project teams will be adding to their GitHub when it's not really significant. But we've actually corrected for that. And we had an article that was published a couple of years ago that sort of touches on what we do think is important events versus, nonsensical things that we don't actually count in development activities to sort of give the most accurate gauge possible. And that includes things like number of code pushes, issue interactions, pull requests, etc. And you guys should be able to see this link up here, but you can also quickly just Google Santiment GitHub activity, and this article will pop up on Medium. And it really thoroughly explains how our metric works here. So
your metric, it's really maybe like you could even call it meaningful development activity, or it's not just GitHub commits like we often see in other data.
Right, absolutely. It's meaningful, actual notable development that would be
cool.
Sort of an indication that the team is doing is progressing.
Awesome, that's good to know. I didn't know that.
Yeah, absolutely. Moving on. So I also want to talk a little bit about social volume and how that works. The way we track social volume is essentially tracking any mentioning of the cash tag or the full name of any given project, whether it be Bitcoin/BTC, Ethereum/ETH, so on and so forth. And we use 5 to 6 different platforms to really gauge how often or how seldom any project is being discussed. And all of these blue lines here, I can actually edit it here. It looks like
just so people know as well. When Brian says cash tag, that's when we use the $ on Twitter, and people do that to tag like the tickers of different stocks or cryptos. So that's all cash tag means.
Precisely. Yeah. Thanks for that explanation. So essentially, all of these blue bars are currently representing 4 hours of data, and it's showing the amount of mentioning of Bitcoin. Make it full screen so it's a little bigger. All the amounts of Bitcoin or BTC over time and how it sort of correlates with price. And you can see some pretty interesting trends when you really look here. These large spikes anytime you see spikes that are sort of outliers compared to the candles around them, they tend to correlate with tops or bottoms. At the very least, they indicate a trend reversal being imminent. So you'll either see, something like this, for example, this candle here. If you see this green line, it's a little faint above the blue bars. It shows that there was a little bit too much hype and crowd euphoria around when the price jumped from, all the way down at 9,100 on July 20th.
Can you change the color there, Brian, or not, of the green one?
Yeah, absolutely. Let me make it a little more visible.
Yeah,
so I can actually use area, and I can use.
I think something dark like red or something will just show up better on the screen.
Absolutely. How about a dark green there? Even a white actually might work well. Yeah, there we go. How's that?
Yeah, I think that's better. Yeah.
So yeah, the white line here, if you can see this big spike in social volume compared to price, this was the euphoria spike that occurred when price just jumped over 11K after just 10 days ago being at 9K back in early August. And when that happened, the euphoria basically kicked into the point where the mainstream crowd they almost self-fulfilled the prophecy of the local top coming in, because too much lower end trading happened, which allowed whales to recognize this and likely sell off, which is why after this spike came in, we immediately had the drop. Not a significant one, but a drop nonetheless. And sometimes they're more extreme. We have projects that this is even more recognizable. I won't get into it now, but we love social volume because it's a great sign of a trend reversal being imminent.
Yeah, so, and that just makes sense. I mean, it's harder to move a $300 billion market on tweets and some social hype. But if you think about individual smaller cap coins, we've all seen it where it's people go nuts on Twitter, and then all of a sudden it's the old pump and dump or whatever it looks like, and it comes through, everyone's tweeting about it, and then the bubble pops.
Yeah, Absolutely. So we actually had an article about this. We did some backtesting on this phenomenon. So the social volume data set that we've developed, I don't think anybody really has it on the market. So when we initially developed it, we weren't really sure what to look for, right? And how valuable it will be. So one of the things that we've done with this data is we've backtested these social spikes on low cap and mid cap coins. So we actually isolated the top 5 coins or something like Bitcoin, Ethereum, Litecoin, XRP, because for those coins in particular, there are 2 times where you see spikes in social volume. It can be either during tops or during bottoms, right? Because the crowd is essentially equally sensitive to both sort of market moves in both directions. Whereas really the only time that the mainstream crypto community starts talking heavily about a mid to low cap coin is during a price increase or a rally. So what we've noticed is that when there are massive spikes in social mentions and social volumes for altcoins in particular, in the next 12 days, on average, these coins lose about 9.2% of their market value. So this was done on I think, sample size of about 200 coins. This was an analysis that was done about 6 months ago. So there definitely seems to be some correlations between the spike in social volume for a particular coin and its sort of subsequent market action.
Yeah. Maybe show us that screen later as well, Dino, if you can find it when we're working through these other metrics as well.
I'll do that now. Sure.
Yeah. And along the lines, while Dino was talking about that, I just wanted to bring up this chart here, which is isolating the amount of times that people bring up the words buy, bought, bottom, or bottomed. And you'll see some pretty significant local tops that come in on every one of these spikes here. Even going back to September 21st, you can see that there was a local top here. Everything dropped. That's when everyone called the bottom. And the bottom actually did not come until about a day later. You can see bigger spikes here, and almost every single one, like even our most recent one on November 30th, this was one of our largest spikes when we got up to 19.3. It eventually crawled about $100 higher before dropping back down to 18.6 just a few hours later. So really cool stuff you can do with our metrics. And you can simply go to Sand Trends over here and type in any words you want. You can even compare to like sell, sold, etc. so you can see two different bars. But it's pretty extensive what you can explore.
That's cool, because we have been talking about the fact that a lot of people kept calling the top on the way up before we actually truly went parabolic and kept going higher. So that is interesting.
Yeah. And Dino, you mentioned you wanted to share the screen you were referring to. I could easily hand it off to you really quick here.
Oh, sure. Yeah. I got the article, so let me share my screen. I mean, I can link it to you, I guess, Alex, so you can.
I just wanted to,
if
if you had that screen that you mentioned, just about a couple of examples, it might be good to show people now.
So this is the results of our analysis. So it says here, coin claims top 3 positions on emerging trends. Just so we are clear on what that means, we have this tool called Santiment. Let me show you real quick. It's essentially a list of top 10 words based on our data that are gaining the most steam on crypto social media relative to their previous 2-week average. So what we're trying to do is we're trying to find sort of the up and coming topics in the crypto community, emerging trends essentially. So this is the list when you go to app.santiment.net/lab/trends. And the list gets updated every hour. It's basically a list of just 10 words, and very often what we see, so for example, currently we see acro for some reason starting to trend very heavily. So after a while, we've noticed that there seems to be a correlation between the words and coin names and tickers appearing on this list, especially very high up on this list, like Acro is at the moment, and their price action. So one of the things that we've done is we've done this analysis or backtest on 200, it's actually 199 instances of when a coin claims the top 3 position on this list of emerging trends, when its name gets high up there, pointing to the fact that it's getting recognition by mainstream crypto community. So what you're seeing here in blue is the average price of these coins in the 14 days prior to their sort of spike in social volume, and then their average price 12 days later. So it's very sort of clear how the price starts to rally as you see, as the amount of social mention starts to rally as well. Essentially, people start hyping up the coin. FOMO kicks in. On average, everybody's going, Lambo and Moon in various Discord and Telegram communities, and then this is what happens on average in the next 12 days. So about I think 8.9% decrease in the next 12 days. So this is something that we've noticed with our social data, is that it's usually more reliable of a top indicator than a bottom indicator, especially for low cap coins, because not a lot of people care about altcoins until they start pumping. So when you see these massive spikes in social mentions, it's time to reconsider your position sometimes.
Yeah, I think this is something we've spoken about a lot, how often by the time you hear about it and it's hot, you're the herd, you're buying the top. What I would be interested to see would be a breakdown, because I think a lot of like shit coins that are pump and dumps, the price would fall off sharply, and a lot of the really good coins could hold their price or keep trending higher. And I just wonder if that data would get skewed and end up somewhere in the middle here. But there's probably a clear difference between the good and bad projects.
Yeah, I think so. I mean, there's additional analysis that we can do on this, but like you said, yeah, I think sometimes this is, at least from my anecdotal experience, you could kind of see like this doesn't necessarily need to mean that it's an ultimate top, especially for coins that are like, for example, for Chainlink, you'll very often see these sort of spikes in social volume that do end up coinciding with a short-term price correction, like something in the next 48 hours, but then we'll have another leg up.
Yeah.
So, it's not necessarily that once you see these types of moves that it means that we're at the absolute top and that it's all downhill from there. I think very often, especially with coins that have otherwise solid fundamentals, these spikes in social volume are usually just a yellow flag that we are sort of due for a timely correction before we can really start moving up again as the crowd sort of loses interest. Because usually, I mean, I think a lot of people in the market, sometimes I see these posts like, oh, sentiment about a particular coin is very high, that means we're super bullish. Not that's super bullish. We have discovered the opposite usually to be the case. Like, for example, I have here this chart prepared, which is the social sentiment towards a particular coin. So outside of just social volume or the amount of mentions of a coin, we also, in the last year or so, we've developed an algorithm which parses all of this data that we collect, and it labels all of the incoming messages as either positive, negative, or sort of ambivalent towards a coin. And the result, for example, is this sort of metric. We call it weighted social sentiment. It's essentially the difference between positive and negative messages towards a coin over time on crypto social media. So let me zoom out a bit. By the way, yeah, there seems to be a bit of a lag on the price action, but you can definitely see the sentiment towards Bitcoin over time. So what we've noticed very often, and you'll see this on a 2-year view, is that these major spikes in social sentiment do tend to coincide with short-term corrections. So we saw this during both of Bitcoin's 2019 top. We saw it even before the Black Thursday dump in February during the February rally. We saw it during the May halvening. We saw it during Bitcoin's August rally as well. And then we've seen it here as Bitcoin started to rally into 19K territory. Now, the relatively good news is that in the past couple of days, really a week or so, the relative or the average sentiment towards Bitcoin has started to drop down quite heavily. And I think you could kind of just look at your Twitter feed and kind of get the same impression. But this is, at least as far as our data is concerned, sort of a confirmation of the trend that a lot of people seem to be getting less and less confident about Bitcoin's move upwards. Now, I'm not obviously saying, or nothing that I say should be considered as any sort of financial advice. However, in the historical trends, it usually seems to be that Bitcoin tends to rally from overwhelmingly or predominantly bearish sentiment rather than positive sentiment. So you can see this here in June 2019 before we started to rally. After a correction, once again, we dipped quite heavily into bearish sentiment before we started rallying again. As Bitcoin started to consolidate after the Black Thursday dump, and after the May halvening didn't really pan out price-wise, once again, we dropped into incredibly bearish sentiment before popping off. And then here, similarly, after the September 1st correction, market-wide correction, we once again went very deep into bearish sentiment before eventually turning, before the price started to rally. So currently, we are sort of starting to move back into that ambivalent territory, undecided territory. Ideally, what you would like to see is we go down even further. So you want to see FUD essentially start to permeate a little bit in the crowd before you can say, okay, it seems like, at least according to the social data, Bitcoin is definitely undervalued, right?
Cool. I think that's a good summary of where we're currently at. Is there any metrics that you want to add to that, Brian, of what's currently happening while we're on Bitcoin?
Yeah, I can take my screen back, Dino, and show off a few more things.
Sure.
I kind of get a feel. I agree with you. I did a bit of a flash update last night on my channel, and I just feel that there's a lot of people are expecting us just to keep going up now, and I feel we need like constant momentum and new money and excitement building, and that is just not showing up at all in all the stuff that I look at.
Yeah, especially I can show a little bit later a few sort of indicators that retail money I don't think is necessarily entirely into this rally yet. No. So Brian, if you want to, you can start with some Bitcoin metrics and I'll circle back into that.
Yeah, you bet. So what we're looking at now is one of my favorite metrics and what I do think is one of the best leading indications as to where price is going. This is Bitcoin's daily active addresses over the last year, going back to December 7th of 2019. And as we can see, the daily amount of addresses interacting on Bitcoin's network on a daily basis has obviously been going up, and that's a good sign. For price and DAA to be fully in line, we need to see daily active addresses constantly growing at a trajectory like this when price is rallying, like it has since Black Thursday, essentially, after we had that huge 50% price drop. So what we're seeing now is good. I wouldn't say it's great. Essentially, we look for a rise that is consistent. And what we really saw was right around mid-September, there was kind of, or even before that, going back to mid-July, we kind of had a lull where we kind of got a little stagnant. And I don't have price currently overlaid with this, But price has been going like this, right? While DAA's mostly been staying flat. And we've even seen like the peak here in early November, just about a month ago. And the last few peaks have all been a little bit lower. So we have price kind of still going like this, and now it's sort of flat right there, while DAA kind of flattened out around mid-July, late July. And even though it had a few big peaks, we'd call this more of a plateau than anything. So this segues me to show off our divergence model. And what this does is it's actually taking all of the data from Bitcoin over the last 4 years. So going back to late 2016 to now, we're measuring all of the individual days of price and all the individual days of address activity, and measuring them based on kind of a ranking system where, we look at something like this, where we're having one of our highest possible price days of the last 4 years, but address activity would be more in the mid-range, on the high end slightly, but kind of more in the mid-range. And that's why we're seeing all of these red bars. All of these bars represent whether it's a bullish divergence for active addresses or a bearish divergence one. And as you can see, the algorithm speaks for itself. When we have these big drop-offs that occur, it usually comes right after these red bars are starting to accumulate. And then, of course, when Black Thursday occurred right here on March 11th, 12th, that's when we have these huge bullish divergences showing up, because it corrected way, way more than it needed to, essentially, and people panic sold as the price was dropping, causing it to actually get to below 4K, I believe, on a few exchanges. This model was basically saying, yeah, that's going to be a little bit too low for where we're seeing address activity, which was still pretty decent.
Can we go back to like the big plunge in 2018? And would that maybe be an example of when price corrected, but there weren't a lot of daily active addresses in my mind? I'm just trying to think of an example where price was going down, but it maybe wasn't the right thing to say, well, hey, there's lots of activity, it's going to rebound strongly. There's actually not a lot happening, and the plunge continued.
Yeah, so going back to 2017-18, our data is going to be skewed because it has a hard stop at 4 years ago. So it's more of a recent model, but I can tell you for certain, if we went down here, let me see if I can just isolate 2017 to 18 so we can look at that big bull run. We'll say something like June, or we'll even say like April of 2017 to April of 2018. I think that would be a pretty good indication.
Yeah.
So here's what we were looking at, and let me overlay price to give an accurate portrayal. There we go.
I was thinking more of the bottoming, but let's have a look at the topping as well.
Yeah, okay, that's fair. We could do both. So essentially, address activity was foreshadowing that price was going to rise, especially here in October, September of 2017. If people who were around in that era remember like the China FUD that was going on in the late summer, that's when prices were kind of suppressing right here. But eventually the China FUD kind of got, a little more lax. People became more comfortable getting in their investments for crypto. And that's when the price took off and address activity was really starting to explode. And obviously it peaked right here on December 14th and then had a big drop off just a few days before the actual price peak. And if we were to look at this right here, when there was this absence of address activity, we would be fairly confident that when it did bounce back like this, it wasn't just going to be a continued rally. It was likely going to continue to drop back off. And this was more of a bull trap right here because of the fact that DAA was dropping off so significantly.
That's so funny you say that. That the 14th was the day that I thought we had topped. That's when I did my post saying to sell. Yeah.
Yeah. So you nailed the actual top a few days later if you actually acted upon that feeling.
Cool. And yeah, what date did we bottom? Late December, was it? 18?
Yeah, I think it was right around then, maybe even November. Let me check.
But I'd be very interested compared to what's going on at the moment, where people were selling, but there was not a lot happening. I don't think there would have been a lot of active addresses after the bear market.
Yeah, let's go to like something like late 2017 to early 2019. Ignore that model. Let's look at this. So we bottomed. There were a few bottoms. So yeah, right around here. This is right around the 14th, 15th, 16th of December. We were starting to get a little bit of an uptick right here. So if I can actually simply isolate it by dragging. Oh, I know it's not working because we have another model. Oh, I know why. It's on full screen. So if I do this and I just highlight that, it's going to zoom in.
Awesome.
So now we can look at the actual bottom.
So those first few initial plunges, that the active addresses were also dropping. That's what I thought would be the case. That's interesting.
Yeah, exactly. We definitely had a drop down in DAA, but it stayed pretty high. And basically, when prices are dropping this much, going from something like 6,300 to a bottom of 3,200, just about a 50% drop, you would expect daily active addresses to be dropping like this. But after this bottom day on December 1st, 2nd, things started to pick back up again, and they were close to the levels they were back when it was still in the mid 6,000s. So that would be a bullish divergence and something you could look at and say, I don't think price is going to go much further down. It's eventually going to have to rise because there's just too much network activity.
Awesome. Cool.
Let's see. I want to show a few other things. In terms of Ethereum, yeah, I'll keep this short. It's basically looking the same as Bitcoin right now. We had this big bullish divergence here back when we were in the mid 230s, and then it basically rocket launched into the 400s and above. And it actually started to become bullish as it was ranging from 3 to 400 very briefly, but it's mostly, according to our model, stayed pretty bearish here. So just something to keep in mind. Obviously, this is just one of many indicators, and these indicators work best when they're in tandem with others like NVT, which we may or may not have time to show here today. But we've got a lot of models like this. This just happens to be one of my personal favorites.
So why do you think that is, Brian? Because we keep hearing that there's millions of users and more addresses than ever growing in the Ethereum community. DeFi is taking off. So how can the active addresses be so low?
Yeah,
I think it's the fees.
Sorry, did you say something, Dino? Or was that you?
Oh, sorry for barging in. Yeah, I think it's partly the fees. Brian, you can show the average fees on Ethereum there in the left side menu. We recently added that as a metric, and you'll see, especially in sort of the August to September period where the amount of activity on the Ethereum network has started to drop off, you can see a coinciding rise in the amount of fees on the Ethereum network, which has obviously or naturally priced out a lot of small return interactions with the network. And we've been seeing an uptick in the daily average fees for Ethereum as well in the past couple of weeks and almost a month now. So I think that also plays a part in it. And I also think that's a little bit of reason why these types of, especially daily active addresses as a metric, can be currently a little bit misleading for Ethereum in particular, because the fees are pricing out a lot of small return interactions, but I think the whales are still completely fine with playing in the market.
Yeah, okay. And as you pointed out, Alex, with the F addresses becoming F2, especially a lot of the larger whale addresses that we tracked, there's going to be some skewing in the data that can be easily misinterpreted and hard to really tell an accurate story like we have been able to historically for Ethereum.
And did you want to show us the NVT? Because it is one that I've touched on the channel before.
Yeah, absolutely. So this is an NVT model that we worked on. We've had it up about 6 to 8 months or so now, and it works quite well. What this is essentially doing is measuring the amount of unique tokens being moved on a daily basis, and all of these bars are representing full months because this is more of a long-term signal in our experience. And the closer the market cap and the token circulation is, the better, because if the ratio is low, that means the token circulation compared to market cap is high. So when there is a lot of token movement, just like we talked about from the perspective of addresses, we can also look at particular tokens, excluding like wash trading, which obviously means that many tokens are being swapped. The same tokens are being swapped over and over on a daily basis. So it excludes that. and looks at just the unique tokens, any token that has only been touched once per day, in order to accurately gauge how well that token circulation is looking compared to where the market cap is at that given time. So if we look at this model here for Bitcoin, I'll show Ethereum as well. When the bars are red, aka high, and we have these trend lines here to sort of show 6, 11, 16-month trends to give a way for the model to assess the NVT growing over time, because it takes less and less NVT to propel the price upward as time goes on, according to our studies. So we have trend lines that kind of adjust for that. And anytime the bars are over the trend lines, that means it's a bearish signal, because there's a further gap between market cap and token circulation. So in layman's terms, when it's red, that's generally a bearish sign, not enough token circulation. As you can see, price tends to drop when that happens. Happened here in 2018, happened here from mid to late 2019, all the way up until January when it finally started to rise. And then when we get these yellowish bars, which often signify a reversal coming, that's when it's time to buy back in. And vice versa, if we were in green and now we're suddenly seeing a red bar, which, once again, not investment advice, this is just one of many indicators. The first 6 days of December are saying that we're not getting enough token circulation to justify this 19K price level. So this works really well. I like to use it in tandem with daily active addresses and a few other things on our website. But the color of the bar on any given month tends to fairly accurately predict what the next month is going to look like. So if you're seeing red, the next month is likely going to react to what has happened in that previous month. It's not perfect by any means, but you can see very clearly here there's a pretty nice correlation. When it goes from red here to green, all of a sudden price explodes, goes red again, price tends to get a little stagnant, and so on and so forth. And I think it's a really cool model.
Fantastic.
This is what it looks like for Ethereum, by the way, much better, which is interesting because on the daily active address side, it's bearish just like Bitcoin.
I think you're definitely right that a lot of action is maybe moving to layer 2s or being held back because gas is too high. So that is interesting. Guys, we do have to wrap up shortly, but is there anything else that you want to show some good examples for people?
Sure. Brian, can I share my screen for a sec? I wanted to, I think sharing a few more things Bitcoin related might be the best way to wrap it up. I'm trying to share my screen, but it won't.
You're frozen again. Sorry, Dino.
Okay. Should I reload?
Yeah, reload. You reload.
Okay, one sec.
And I definitely think we'll use this as a bit of an intro episode, Brian, because I've got a feeling people are going to have a lot of questions. And we might get you guys back on and do something live the next time. So we can use this as a bit of an intro, because there is so many things that we can get to, and we might take some requests. We might even do a special video for members only where you guys can put some coins in you want us to look at. So yeah, this will be a maybe even a regular segment. We want to do something. So guys, this is to pique your interest. If we don't get to everything today, don't fear.
Yeah, and also a short little shill or plug here. We also have our own sort of weekly breakdowns. So anybody, we do basically what you just mentioned, Alex. We have people ask us, about coins that they're interested in, and then we do some little sort of impromptu live analysis every Friday on the Santiment YouTube channel. So if you're interested in that sort of stuff as well, sort of just a overview of the market on a weekly basis, be sure to check that out as well. I wanted to share a few more metrics for Bitcoin, because I think it's quite interesting to compare not just on-chain data, but also a variety of different sources. So currently, for example, I'm looking at the derivatives data, right? So this in particular is the funding rate on BitMEX for Bitcoin. And you can see here, for those unfamiliar about a particular metric, we do have sort of explanations about every metric alongside videos and additional sort of articles explaining it. So as far as funding rate is concerned, I think a lot of people are familiar with it, but essentially it's a fee paid by one side of the perpetual contract to the other. So when you see these spikes in the funding rate, that means that on average, longs are paying shorts, or the market is bullish, or the derivatives point to market being bullish. And then when the funding rate is negative, shorts tend to pay longs. So it's interesting to see, especially here, once we kind of came to the 19.6K range, we saw a massive spike in the positive funding rate for Bitcoin on BitMEX. This is also for a number of different exchanges. It shares sort of the same picture.
This is one that we've covered in a fair bit of detail. We spoke about this specifically the other day because I did agree it really stood out.
Yeah, I mean, you can kind of see it, especially it's basically the highest spike since the August 18th sort of summer top here. And you can also see, a string of spikes as Bitcoin started to consolidate, another spike before we started correcting, and then, another string of spikes before a short-term corrections. Now, we did sort of drop into the ambivalent territory once again before the weekend. Now, it seems like at least on the derivative side, we are sort of shifting slowly into the bullish sentiment again. This isn't to say that we are absolutely going to be, moving down. It could point to a short-term sort of correction, but it's just one data point to look into. Now, this is the last thing that I maybe wanted to share. Don't want to, kind of overwhelm people with our metrics. In particular, here we are looking at the holder distributions of Bitcoin. So I'm actually going to filter out all of them to start with. So this is the price of Bitcoin. And here you can select the particular group of holders that you want to look into. So what we are going to look into is the combined balance of different categories of Bitcoin holders and how they have been behaving throughout this rally, right? So I wrote about this last week. I think it's an interesting sort of thought experiment. I don't think this is a perfect measure by any stretch of the imagination, but it's interesting to see several patterns sort of start popping out. So currently, for example, here we're looking at the combined balance of sort of retail Bitcoin holders. So let's say between 0.01 and 0.1 BTC and up to 0.1 to 1. So we can see that they've actually started, they've accumulated at the start of the rally, and their combined balances or combined bags have started to grow throughout sort of September and early October. And then at sort of the 13.5K mark, so basically, really, after we broke to 15K here, the combined balance of these sort of small addresses has already started to diminish, pointing to some sort of, shakeouts, weekend capitulation, even before we really broke the 16K mark. And you can also see this, I think, in the 10 to 100 BTC range as well. We've seen people start to kind of move, away from BTC at these levels. Now, this has also happened for, people that were accumulating between addresses holding between 1 and 10 BTC. They've started dumping here around the 15K mark, but they seem to have changed their mind once again and have, started to accumulate again in the recent weeks. Now, so this to me begs the question: okay, if we see especially retail categories of Bitcoin holders start to sort of offload their bags, at least in the short term, the question is who is sort of still driving the price up or who's still accumulating. So one particular group that I like to see and that our founder especially likes to look at is the sort of, mega millionaires for Bitcoin, I guess you can call them now, addresses that are holding between 1,000 and 10,000 BTC. And these guys have, for the most part, been consistent. So we're looking here at the last 6 months. I guess I can zoom in a little bit so you can see since the September, late September, they have been consistent in accumulating Bitcoin. So this is the percent of total supply that they hold of Bitcoin. So from 27.9% all the way to up to almost 29% today. And you can move here to absolute numbers to see exactly how much Bitcoin it is that they have accumulated in the past month and a half. I think it's about the last time I checked, I think it was about $1 billion worth of BTC or something like that in the last month and a half. So for me, for example, one of the things that I like to look at is this particular group of holders and how confident they are in Bitcoin's short-term and mid-term price activity. If I were to see any sort of notable declines, especially if I see a correlation in the amount of Bitcoin moving into exchanges at the same time, that could point to a sort of short-term sell-offs by whales as well, which could prove to be concerning given the current state of the market, right? So just a few things that I wanted to add to the discussion.
No, that's good. We covered that report at the time as well. That was one of the things we looked at. So I agree with all
By the way,
of that.
can you still hear me, guys?
Yes.
Yep, I can hear you.
Okay.
Alex,
Cool.
Oh, sorry, I was on mute. I was just going to say, yeah, we covered that. We covered that data as well at the time. I think that was really handy stuff. We do have to wrap up now, guys. But any final thoughts? I'll put all the links to follow all your stuff down below. It's all on our website under the partners page as well, guys. There's discounts there for you as well as for our members. But any final thoughts for us, guys?
Just if you're interested in this type of data, number one, check out app.santiment.net. Create a free account. There's a 2-week trial for all of our metrics, all of the models. We have over 100 different metrics and indicators to help you better visualize and understand market behavior. And then if you are not really sure about how to use any of the metrics, just go to our insights page. We talk about different ways that we analyze data with our metrics pretty much on a daily basis. So there's always something to kind of nudge you in the right direction as far as how to use our data. And then finally, just another plug to our YouTube channel. We also do live sort of streams every Friday at 4 p.m. Central Eastern Time. We jump onto a call and just talk about the market and get requests about the coins that people would like us to see. And we do some impromptu live analysis on it. So if that's the type of stuff that you like to see, check out Santiment's YouTube channel as well.
Yeah, that This Week in Crypto call on every Friday at 7 a.m. Pacific time is myself and Dino right here. So we will be going over these metrics on a regular basis every Friday, and we've been growing pretty steadily as far as viewership. So we'd love to see you guys stop by if you're up at that hour. And Alex, as for you, I just want to say thanks for having us for this time to show off everything we've got, and we'd be more than happy to do a part 2 and make it a regular, recurring series.
Absolutely. Yeah, no, I've tried to show off a lot of the different metrics, some of which we didn't even get to today because there are so many. But guys, I do think we want to try and mold a regular monthly episode of some sort. So I hope everyone at home has appreciated that. I certainly watch their regular videos on a Friday. Appreciate what you guys do. It's a great platform. Thanks for coming on, and we'll definitely have to do it again in future.
It's been a pleasure.
Thanks, Alex.
Thanks, guys. Cheers.